Welcome to another episode of Intentional Wealth. My name is Amy Braun-Bostich, and this is Cassandra Kirby. And today our topic is inflation. So many clients have been talking to us about inflation. It's been in the news a lot. And so today, Cassie is going to talk to you about some tips of helping you get around inflation, and I'll just talk about inflation in general. So, what causes inflation? So there are a variety of things that can cause inflation. One is the weakening of the dollar. And so right now, quite possibly, we're in a secular weakening cycle with the dollar. By secular, I mean it's probably a longer term phenomena. What would cause that? Well, many things cause it. Mostly, all the debt that we have can be instrumental in causing the dollar to weaken, and also with the credit, not having a lot of faith in the credit worthiness of the U.S. government could cause a problem with the U.S. dollar. But there are also some good things that happen when the dollar is weaker. For one thing, the products that are being sold by international companies, and many of them are here in the United States, um, companies that are in, say, the Dow 30, they get a good percentage of their business from the international or global community. And so when the dollar is weaker, that means that other currencies are stronger against the dollar. And so it's easier for global entities or countries to purchase goods. So for international companies, that's the weaker dollar could be a positive sign. But for us here at home, the weaker dollar often means that we're not able to buy as much. And that is probably a good um, definition of inflation is the erosion of the purchasing price of your money. So we've all seen that in the grocery store. So the consumer price index of August came back with I think a 2.1 or somewhere between 2.1 or 2.7% reading. But the consumer price index ignores the cost of energy, and it also ignores the cost of food. And we've all gone to the grocery store and sworn off steak and other types of groceries because of the cost. So, what are some tips that you have for people going to the grocery store?
Yeah, just a couple things are to shop at like discount
Hmm.
stores like Aldi or Walmart, or to buy in bulk, like at Sam's Club or Costco, and then freeze things, when you see that things are on sale. Another way to kind of combat inflation, dining out is really expensive. So cooking at home can help to cut some of those costs. Although some people, dining out is their main form of entertainment.
Hmm.
So that's easier said than done.
A lot of people don't like to cook anymore either. I've noticed that.
Yeah.
So that's problematic.
But you can be smart about like where you buy your produce and bulk for meat. It just takes a little bit, it takes a little effort to implement that into your behavior
Even
pattern.
using coupons, I guess. I sometimes I'll clip coupons, but then I laugh to myself. And then I'll even take them to the store. But I get so distracted by the time I'm paying for the groceries, I forget to give them the coupon. So
Yeah.
I've done that, I don't know, numerous times. So that's coupons and me don't get along that well. But
It's
I think,
interesting too that in 22, which was when we had 8 or 9% inflation, a lot of clients have kind of commented on how things really haven't come down
mhm.
that much. So they're seeing in the readings where inflation is coming down, it's under control, but nobody's really feeling that.
Food prices are very sticky. So that's a long-term phenomenon. It's hard to get food prices down. And there are also some competing issues in the United States right now that are keeping food prices lofty. For instance, tariffs, right? And also, and this is going to be controversial, but The mass deportations of agriculture workers and construction workers can also keep prices fairly high in those areas.
Mhm. Regarding the tariffs, I guess we haven't really seen the full impact of them yet.
Hmm.
And I think I've read a couple different things, and it's because some companies had inventory where they didn't have to, restock yet. And also where some of the companies were kind of eating the tariff for so long. But at some point, maybe sooner than later,
Hmm.
that will flow down to the consumer and be another concern as far as inflation.
Hmm. That's true. In fact, there was a report that Ford had taken an $800 million hit because that's what they paid in tariffs, and it totally wiped out the profit for them during that time period. So no company is going to continue to do that because it would be disastrous for their stock price for the company as a whole. And we're starting to see some stress, right? You're starting to see lower job numbers and more layoffs. And that typically happens when profit margins are compressed. So we'll start to see more and more of this. The other thing is that the reading on the PPI, which is the producer price index, which is more wholesale cost that companies incur, it went down month over month, but it's actually up 2.7 or 2.6% for the year. So the cost of goods for companies is getting more expensive as well.
Mhm. I had a conversation yesterday with a client where they were kind of questioning the benefit of tariffs over time.
Hmm.
So if you look online, you can see what the projected, what it's projected to bring in over the next however many years. But I don't think that takes into account the impact that the tariffs will have on consumer spending, businesses, profit margins, and those are all things that could slow growth, right? So
Hmm.
there are things about the tariffs that we don't know the other side.
Right.
Yeah.
Yeah. So, and especially if the dollar is weakening, right? If the dollar is strengthening, then that can help to soothe some of the impact of a tariff. But if the dollar is weakening, it's not going to do that. So that's problematic. The other thing is tariffs are nothing really more than a tax. So somebody's got to pay the tax. And it's not China and it's not Canada and it's not Mexico, it's not India. It's either the company that is importing the good or it's the actual consumer. So it's either going to be that the companies take a hit or the consumers take a hit, and most likely it's going to be both companies and consumers. So we'll start to see, a pullback in the market as well
Mhm.
because of profit margins being compressed. So
Yeah.
nobody's really a fan of tariffs. Well, obviously the executive branch is, but most people are not really a fan of tariffs. And the other thing is, so we had something called a de minimis tariff, where if a product was under, I think it's $800, that we wouldn't apply the tariffs to that, and that allowed companies like Sheen or
Timu.
Timu,
Yeah.
those little products that the American consumer really likes, that are very inexpensive, to prosper. And now they're not going to be able to do it.
Hmm.
So that's going to be sort of another cost for consumers. Mostly it hits lower income people the most, right? Because people that are living paycheck to paycheck, the cost of food is really impactful to them. If you're a billionaire and a steak is $10 or $12 that you buy at the grocery store, you're not going to care. So.
Hmm. Yeah. So some of the other things that you can do, and we've talked about some of these things in other podcasts, but just kind of look at your subscriptions on a regular basis and see what services you aren't using anymore, and then cancel them. Um, Sometimes that's hard to do because maybe you aren't using it now, but in the back of your mind, you're thinking, well, I might want to use that. And I think that's what makes it hard. I know my son has a 3D printer, and I bought into this subscription. It's $10 a month, but now I feel bad to cancel it, even though he's not printing that much. But what if he wants to? So, it's those kind of things. You don't really need them, but you would probably be better off to just cancel that and maybe resubscribe later or look for a lower cost option. So, like your cable services, your Netflix, you can always talk to your cell phone provider or even Comcast, Xfinity to see if they'll come down in price at all. Although sometimes that's usually only for a certain period of time, and then they'll raise it back up. But even in the short term, just for some relief in your cost. Couple other things. If you haven't had your property and casualty insurance reviewed recently, maybe consider doing that. So your homeowners, your automobile insurance, you might want to shop around with other carriers. We have the ability to do that for you as well. So maybe another carrier can offer a lower rate. And if you're not willing to switch, you might be able to just kind of use that as a talking point for your existing carrier to come down a little bit. The other thing you can do related to homeowners and auto insurance is increase your deductible. That will lower your premium. So if you pay a $500 deductible, if you have a claim on a car accident, maybe bump that up to $1,000, and then your premium will come down. Now you want to make sure that you keep enough cash aside in case you do have an accident, because that's when you're going to pay more. But that's a great way to get that premium down.
I think keeping your automobile longer too, right,
Yeah.
is helpful, especially if you're in a state that assesses personal property tax, like Florida. I think South Carolina
Mhm.
is another state that does that. So the tax being assessed is going to be a lot higher on a brand new car than it is going to be on a used car, just because it's based on value. So those are some other things that you can think about doing.
Yeah, and just also being careful that you're not accruing debt with your regular spending, like relying on your credit card and then not paying it off every month, or tapping into like a home equity line for regular spending. That's a problem. I think you need to be, aware of that. And if you're doing that, try to cut your expenses so that you can avoid that, because it just compounds
Hmm.
over time.
Yeah, I think people aren't moving as much now either because
Yeah.
of the mortgage rate. So people were able to lock in 3 to 4% mortgage rates, and now the mortgage rate is up over 6% for a conventional mortgage. We had a client get a mortgage for, what was it, 5 3/4
Hmm.
under a veterans, the VHA.
Yeah.
Um, but so people aren't moving as much because even at the same price, your payments would go up under the current environment. And a lot of people think, and I just had this conversation with a client yesterday, that the Fed just needs to lower interest rates. And the fact is that the Fed does not control the longer end of the interest rate cycle. The Fed controls the shorter end of the interest rate cycle. And lowering interest rates can actually increase inflation, because it spurs growth and borrowing and things like that. So you have to be very careful what you wish for. I do think that interest rates will probably come down in September, but I don't think it would be any more than 25 basis points to 50 basis points, or 1/4% to 0.5%.
I know. I wonder if they'll do a second this year or not. I'm kind of anxious to see how that all plays out. The other thing is we don't want them to lower interest rates too soon, because you don't want rates to have to go back up. If inflation resurfaces or becomes, starts to tick up, that just adds to the problems if you have to raise rates after you lowered them. So to be cautious is, I think, wise in this economy.
Hmm.
Yeah.
we're going through, so we bring in $5 trillion worth of taxes, but we spend 7 trillion. So every year we're adding another 2 trillion of debt. And the upcoming year we'll have to refinance debt that is renewing. So it looks like we're going to have to talk the community at large into buying about $12 trillion worth of debt over the next year or so, which is a lot, and especially since the United States credit has been downgraded now because of the debt. We have about 37 trillion in debt right now. So with all that in mind, that can really impact the longer end of the interest rate cycle. Even though the Fed is lowering rates, the longer end can actually continue to go up because we're needing that to be higher in order to entice people to take the risk. So just some convoluted things that happen with interest rates.
Mm-hmm. So, if you have any questions or concerns, we're available for conversations or emails to go over anything that we talked about. Or if you have, specific questions about a project that you're considering and you're not sure if you should do it now or wait, I think that's another concern for people, where inflation stands. We're available.
And as always, we're grateful to have you as clients, and thank you for the time and for listening to us. We really appreciate it. And give us some feedback. We're interested in how these podcasts are going for the community at large. So
Thank you.